Well, your top story, metals in full meltdown mode. Gold down more than 26% this year. By the way, it's on track for its worst quarter on record. Silver, even worse, down a whopping 39% year to date. Peter Schiff, CEO of Euro Pacific Capital, is here. So is Mike Vogelsang, president of Boston Advisors. Peter, I guess my take is not why gold has collapsed off its highs. I guess my take is, should gold have ever been $19 an ounce in the first place? What's your take?
Well, I think so. I think it's headed higher. I think that what's happening right now is you have a lot of speculative pressure on the gold market. You have speculative longs who have been getting out. You have speculative shorts that are getting in. But I think everybody is operating under a false narrative, and so gold is being mispriced. The U.S. economy is not recovering. We are entering back into a recession. We might be in recession by the end of this year.
How can you say
the housing market, housing prices aren't. Let me finish. No, housing prices aren't going to keep rising. They're about to roll over and make new post-bubble lows. The Fed is not about to tighten. They're going to ease. They're going to do even more QE, not less. I think when the market figures this out, there's going to be a sharp reversal in the price of gold. And I think the people who are selling it now are going to have a big problem trying to buy it back.
Okay, well, Mike, to Brian's earlier point, to what extent do you feel that gold had become over-owned after all the meltdown of 2008? And basically what we're seeing now is an unwind of all of that.
Yeah, that's pretty much straightforward, I think, right? I mean, look, investors, we know human behavior drives most of investing. We know people buy stuff when it's going up, and so look at the bubble period. The enormous amount of flows into the now easily available way to purchase gold, the ETFs that are available. Massive amounts of flows going into those during the middle of the 2000s when equities were going nowhere. People were buying gold because it was going up. Why are they selling it now? Because it's going down. To Peter's point, right? You've got new shorts coming into this thing every day. It's clearly a favorite of hedge funds to be punishing gold. I'm not quite as negative on the economy and the outlook as he is, but we do think that gold's getting a little bit of speculative oversold here. But it's the problem with this is when you're talking about behavior and you're talking about people chasing prices. Where's the bottom? It's really hard to say.
Well, where is the bottom, Peter? I mean, how much does it have to go on until we get to the bottom and a real reason to get back in?
Yeah, well, we know at $1,200, the majority of gold mines can't even mine it profitably. So gold is now trading for less than the cost of producing it. And, of course, in order to produce it, you have to own a gold mine, which is very hard to do. So the price of gold can't stay down here for a long period of time because then the gold mining companies will shut down and there will be no supply.
I push back.
So I don't know exactly.
I push back a little bit on that, Peter. I've heard that $1,200 thrown around, and listen, I get it. But what I don't understand is then why did any gold miner produce any gold at all before gold hit $1,200 an ounce? And they did. So the price of gold production has either gone way up, which means it can go down again, or that number's not true.
No, remember, there's been a lot of inflation that the government doesn't want to acknowledge, but you can see it in the cost of mining. Meanwhile, look at crude oil prices. They're still at $95 a barrel. I mean, so if you look at the gold-oil relationship, gold is extremely cheap relative to oil. So the cost of mining has gone way up. I don't even think the price of gold has kept up with it because there's so much more inflation in the pipeline than is generally perceived. But, again, there's an expression, I guess, in poker, don't count your chips while you're still sitting at the table. I think a lot of these gold shorts that think they're making a lot of money, let's see how much money they've made when they actually cover. Because I think when the traders figure out the true predicament that we're in and that the Fed is in and how much more money is going to be printed, I think gold could rise even faster than it fell.
I mean, we've heard the inflation argument many, many times. I mean, for example, another big commodity investor, Jim Rogers, has said that we're going to get a wall of inflation because of all the central bank money printing. We just haven't had it yet. Don't you think that maybe, Mike, the inflation argument for gold is getting old?
Well,
no, we've had inflation.
It's part of the reason why gold.
Mike first, then Peter, you can get a word in.
It's part of the reason why gold went up, right? It is the anticipation of inflation that frankly isn't coming and hasn't come and probably won't come, right? At least not for the foreseeable investable future. The unemployment, the job problem is going to continue to create downward pressure on prices around the globe. This is a 1970s argument that's not valid in today's world. That's why interest rates are still at secular lows, even though they're up from their lows. They're very low levels. This is gold does well in a negative interest rate environment. Interest rates are clearly turning slightly more positive. It's another reason